This is Dan, and the future holds crypto. So I was browsing through the crypto news, and as if you've seen my previous video, we had some really interesting and major news today. And you can find that in the previous video, and I think that's very good news. But browsing here, basically, when I was looking at this this title, FCA bans crypto derivatives for retail consumers in UK. It certainly doesn't look very positive, and I have to recognize that I panicked a little bit. Not necessarily panicked in the terms of doing anything about it or being scared by it, but definitely I was like a little bit shocked in terms of we have a lot of bullish news everywhere. And it seems that the general trend is going towards adoption, clarity towards crypto. Everybody is thinking of issuing a central bank digital currency, and you have examples here like China and digital yuan, Europe and digital euro, America, US and the digital dollar. And yeah, a lot of things that are going on. Even the banks basically are they receive the green light to custody crypto. That's major, right? There are a lot of bullish news in the past months. We also have the proposal for the Securities Clarity Act and stuff like that. And this took me a little bit by surprise, and definitely. The first impression that I got was that it was bearish news, but the look into this article a little bit deeper. Basically, they're saying that they will be banning derivatives and ETNs that reference certain types of crypto asset to retail consumers. And to go even further, here they are talking about they mentioned Bitcoin, Ether, and XRP, and this will go into effect on January 6, 2021. This ban reflects how seriously we view the potential harm to retail consumer in these products. Consumer protection is paramount free here, said Sheldon Mills, interim executive director of strategy and competition of FCA. Well, definitely it sounds like bearish news, but let's look a little bit deeper into this. First of all, let's see, because I told you I'm learning here as well through the way. So definitely I'm by the way, again, this is not financial advice. I'm just passionate about this domain, and I'm trying to expose my vision and what I learn and what I managed to gather is information throughout a lot of different channels and my perspective on the matter. So don't buy or do anything because of what you see on this channel. But what I learned here is that you have to go a little bit deeper to understand what's going on. Definitely, it's a very very active domain, and actually this is exciting, and I actually like this. But you see here that you don't have a lot of time to get bored. Every day has something new and exciting going on. So let's see a little bit what are actually derivatives, and you can find it on the Investopedia. Derivative is a financial security with a value that is reliant upon a derived from an underlying asset or group of asset benchmark. The derivative itself is a contract between two or more parties, and the derivative derives its price from fluctuations in the underlying asset. The most common underlying assets for derivatives are stocks, bonds, commodities, currencies, interest rates, and market indexes. These assets are commonly purchased through brokerages. Derivatives can trade over the counter or on an exchange. And if we go a little bit deeper as an example here for what a Bitcoin derivatives is, and let me find the location. This oh, going back here, the basic of derivatives, the types of derivatives here. Somewhere you have more types of derivatives. So key takeaways: derivatives are securities that derive their value from an underlying asset or benchmark. Common derivatives include futures, contracts, forwards, options, and swaps. Most derivatives are not traded on exchanges and are used by institutions to hedge risk or speculate on price changes in the underlying asset. Traded derivatives like futures or stock options are standardized and eliminate or reduce many of the risk of over-the-counter derivatives. Derivatives are usually leveraged instruments which increase their potential risks and rewards. And they're going here in all of the types of derivatives, and going back to Bitcoin derivatives. Basically, give me a second here because I'm not sure if this is the page. So Bitcoin futures contracts were launched in December of 2017 and have already gained traction on the market. Many market participants who cannot hold spot positions in Bitcoin currency due to compliance regulations can now trade Bitcoin futures contracts. Future contracts also offer risk mitigation and hedging possibilities. Amid increasing participation in Bitcoin futures trading, here's a look on how Bitcoin trades contracts are priced. How to invest in Bitcoin. You have a lot of you have a lot of information here. They go deep into the technical aspects, but this is an interesting thing that I wanted to show you. Basically, the derivative price might actually differ from the real price. So beyond the theoretical calculation, the Bitcoin futures priced in the real world tend to run with wild swings in either direction. To understand the randomness of the price discovery mechanism of the future, let's have a look on how the prices of Bitcoin future contracts have behaved in recent past. So look here, basically this blue line is the price of real Bitcoin, and the green one is the price of the derivatives. And you see here, while the price of Bitcoin was around 10,000 or 11,000 here, 10,000 I think, the derivatives were already going to 15,000. Here you have 17,000. So basically it's all over the place. So the above graph shows the price of Bitcoin in blue, the price of Bitcoin future contract expiring in April, green, launched in February, and price of a Bitcoin future contract expiring in May, red, launched in March. A few important observations can be made from the above graph. At times, the price of futures may almost come close to the spot price. At times, it may move much higher, and times it may fall below the spot price. This is due to the relative differences between the blue graph and the green and the red graphs at the market locations. Why do such difference occurs? Are future contracts said to closely follow the prices? While the theoretical formula is good for the ideal case of no arbitrage, it does not account for the real-world perception of volatility and price arbitrage. The same reflected in the $5 difference that we saw in the previous section. This happens because the market participants perceive and include the possible impact of volatility. If there are only 2 days to expire, the futures price calculation formula will simply tell us that due to only 2 days remaining, the price of Bitcoin future contracts will remain very close to Bitcoin's spot price. However, due to high volatility, its spot price may shoot up or down significantly within hours. Additionally, there may be big events occurring, like a particular country like China announcing a ban on cryptocurrency, which will change the perception of the market participant for the near term that is reflected on the spot price. Also, Bitcoin trades 24/7, which may mean its spot prices are prone to high volatility within hours and even minutes based on the local deployments. You know that. So, the bottom line: despite all inconsistencies in the price discovery mechanism and large variance of volatility impact on future pricing, future trading remains a high-stake game. Combining it with 24/7 trading in spot prices adds another layer of complexity to valuing futures. Nevertheless, Bitcoin futures trading continues to draw interest in volatility and certainly also allows for profitable opportunities. So basically, this is not actually buying the asset. There's speculation based on price, and you're betting on the price. So it's not from my perspective, it's always better not to play with this stuff around. and especially when it seems to be more volatile than actual Bitcoin, the actual Bitcoin or cryptocurrency in general. I would definitely say to that owning the asset itself, Bitcoin is better, and it's it, this, in my perspective, I would avoid it, but this is just what I would do. And now going to ETNs. So, what is an ETN? Let's look. Let's take a closer look on the definition of exchange trade notes. Um, they are a variation of ETFs. Simply put, an ETN is a type of unsecured debt security usually issued by a bank and traded on exchanges like stocks. Unsecured means that there's no backing of equal value collateral, and therefore unsecured securities like ETN have higher risks. ETN track an underlying asset of securities and are pretty similar to bonds except for one thing: they have no periodic interest payments. ETN investment can take two following forms. Investor can trade ETN on exchanges and earn money based on the difference between buy and sell. Investors can wait for the ETN to mature and get a return on the index it tracks based on the performance of the underlying asset minus fees. In other words, upon maturity of the ETN issuing entity promises to pay the amount reflected on the index after taking their fee. It's worth mentioning that the ETN don't actually own. I'm going to start from the beginning because it's very important. It's worth mentioning that ETNs don't actually own any of the underlying asset behind the indices that they are designed to track. So a Bitcoin ETN is a debt that monitors the Bitcoin price. This differs from ETF that consists of an actual security or sometimes a commodity or currency derivative such as futures, forwards, and options. Yeah, so basically you don't own the underlying asset. ETF is ETN versus ETF. ETF is another investment vehicle standing on exchange traded fund. ETF are considered an alternative between mutual funds and stocks and are a security. In other words, an ETF represents an asset or basket of assets, whether gold, oil, or other commodity or shares, and its ownership is divided into shares that are traded on exchanges. ETFs are used to track the movement of a given asset or several assets, and the entity that issues ETF actually does own the underlying asset. The key difference between ETN and ETFs is that the ETN do not provide the investor with ownership of the security, but merely pay the return that the index produces. Still, both instruments let investors own on price movement of the underlying asset. So, basically, this, if you think about it, the ETN is even not backed by the asset itself. It's just speculation on the price. On the ETF is represented by actually it's a representation of the asset or a group of assets, and the company should have it backed by the underlying asset. But the fact is that you do not own it, and it's not as you have seen in the a few seconds minutes ago, it's not necessarily represents the true value of the asset, and it can be more volatile than the actual asset. So if you actually think about it, this news is not necessarily so bearish. I mean, it will probably make people go and buy the real asset, and this might be actually good news for Bitcoin and cryptocurrency in general, because there will be people going and actually buying the asset, not speculating on the price, not betting on a price. Okay, so, and by the way, I want to give some credit here to MMCrypto. They also have a good explanation here with DaVinci15.
A tweet within a few minutes, and it is about the UK not only banning Bitcoin and crypto derivatives, Da Vinci, it's also about the UK banning ETNs, which you could say is the small brother of an ETF. So, Da Vinci, what are your thoughts on this? The FCA, for everyone, it's the financial regulator of the United Kingdom, and United Kingdom is a very important economy. Many people are copying their regulations. So, Da Vinci, what do you think about this specific news, especially in regards to crypto and the Bitcoin price?
Well, I'm actually kind of shocked that they would do this. So derivative is basically not purchasing the actual asset itself. You are purchasing exposure to the asset. So when you're talking about derivatives, it could mean an ETN where actually a company owns the asset, but you don't have access to it, and that you participate indirectly through that means, or basically they create a synthetic asset that you can purchase that doesn't actually mean that you own you own that asset. It just means you get exposure to the price, and effectively what that does is takes money away from the actual assets such as Bitcoin, Ethereum, and so forth, because it allows people to gamble against the price without affecting the price. So they can gamble large sums of money, knowing full well that they will not affect the price in such a way that the price gets to move higher, because they dumped like millions.
I completely agree with you here. Can we go to the face mod? I'm sure that people want to see you. So I really agree. It's a very, very legit point with the derivatives, because everyone who cannot trade Bitcoin in a futures contract anymore, obviously, if he wants to go long on Bitcoin, he has to buy this asset on the spot exchange, which is much more supportive to the price than a derivative exchange, which is derived from the spot markets, right?
What tends to happen is that ETN can actually go higher in valuation than the amount of Bitcoins that they actually have, or the amount of crypto assets that they have, because it's not an ETF, basically. So it's just connected to, hey, you know what? If you're buying this asset, you're also buying this company that holds it, and they don't have to buy the same rules as an ETF.
Yeah. So you would even say.
So yeah, basically this actually can be good news in terms of the people that were doing this. They can actually buy the real Bitcoin, and if they want to go long Bitcoin, this might actually increase the price, or be good for the market in general. So this is actually not necessarily bad news. Another big thing that I wanted to show you here, this is from Digital Asset Investor. I'm gonna put both links in the comments in the description. It's about Chris Larsen participating in the LA Blockchain Summit, sponsored by eToro.
Stablecoin thing's a little bit different. So we came out with a letter talking about banks' authority to hold deposits that support fiat-backed stablecoins. Our view of that is a little bit different. It is that, hey, stablecoins represent a new form of payments instrument, right? So normally you have fiat dollars that are being transacted according to messages sent on various payment networks, like the SWIFT network or the automated clearinghouse system. Stablecoins, however, transact natively on a blockchain. Could be the Ethereum blockchain, the Algorand blockchain, whatever. Those things have different characteristics in terms of their user interface and user experience, even though the value of them is pegged to the dollar and is fully reserved. So our theory there is, over time, these blockchains really may just be payment networks. That might be the best analogy for what they are. And if that's the case, then we need to start providing some clarity to banks about the circumstances in which they can A, support those projects, and B, at some point in the future, potentially use those blockchains as alternative payment systems to the status quo. We haven't spoken on that yet, and we're working, with our other agency partners to make sure that there's a clear and consistent message from the government on that. But those are questions that need to be answered, and I think we'll be looking at those in the future.
So are you saying that other countries are ahead of the US right now in terms of regulation?
Well, I mean, look, China issued an e-renminbi that is now circulating, and they issued it last week. Our government says that we're 4 years away at a minimum from issuing a test version of a U.S. central bank digital currency. So I don't think that's a matter of opinion. Even going further than that, the EU put out a draft stablecoin framework document about 2 weeks ago. We're working on that right now with our other agency partners, and I think we'll speak to that relatively shortly. But still, the EU is out in front of us. We are supposed to be the global financial leader, or at least we have been for the last 50 years. And I want to make sure that we retain status even as other countries are looking to catch up. That requires that we move faster.
Hey, Jeff, thanks for having us.
Oh, good to be here. Thanks so much for joining us, Chris. Sorry, a bit of a technical snafu to start, but never hurts. Anyways, welcome so much to have the co-founder of Ripple speaking live. If you have questions, please put them into the chat. They'll be relayed to me. But just to open with Chris, what have you been up to? What's the pandemic life been like for you?
Well, I'll tell you, between the fires and the pandemic and, kids going back to school, have windows open at school and then the smoke coming in. So then they cancel the school. So, I guess like everywhere, it's been a year we all want to forget. But we've been fortunate. So.
Yeah, well, at least it's going to end soon enough. We'll have a new year. And we've also had crypto to keep us busy. So let's jump into some of that. A lot to cover here: China, patents, the future of Ripple and XRP. But let's begin with the geopolitical stuff. I know you've shared some fairly strong opinions with me on US's policy towards cryptocurrency and what other countries are doing. So what's your latest thoughts on that?
Well, unfortunately, I just think that the U.S. is woefully behind in kind of stepping up to what is going to be the next generation of the global financial system. We've been in this incredibly fortunate position where the U.S. has been the steward of the global system. We're 20% roughly of global GDP, but the dollar makes up like 80% of all trades, probably even more than that. That is a great position to be in. It's an incredible privilege, and it has really benefited all Americans. But we are being challenged in a major way. First of all, I think we have to talk about China. I mean, we are in a tech Cold War with China, and that goes across the spectrum, whether it's, kind of communications, surveillance, big data, AI, but also blockchain and digital assets. And the reason is because China has recognized that those technologies are the keys to who's going to control the next gen financial system. And we all know that the financial system we have today, it's creaky, it's old, it's from the 70s. SWIFT and correspondent banking is not going to be the system we're going to be living with over the next 2 decades, right? Way too slow, error prone, it's too closed off, it's too expensive. And I tell you, China is just itching to be the one that designs this next system. They've committed $1.4 trillion to a variety of technologies, and blockchain is right on the top of their list. And you go down the kind of inventory of where China is today, it's impressive. They're doing a great job. And nothing against China here. We got to admire what they've done, right? I mean, almost ubiquitous digital payments domestically, incredible numbers, right? That sets them apart from where we are. They are now way ahead on a central bank digital currency, the digital yuan. That's setting them up now to help spread the yuan globally. Huge advantage there. They control mining. All the proof of work mining is controlled by China. If you look at Bitcoin mining, it's about 65% is controlled by Chinese miners. I mean, does anybody have any question that a Chinese miner is under the control of the Chinese Communist Party? No way, absolutely not. And miners are masters, right? They can rewrite history if they want. They can block transactions. So huge advantage there. They recognize that. Incredible. And then you also got to recognize the move in Hong Kong now gives China 2 of the 5 global financial centers. The US only has 1, New York. They have Shanghai and Hong Kong now. So that sets up a pretty nice picture for the power that they're going to have in designing the next gen system. Compared to that, where the US is, we don't have a digital dollar, right? Even though folks like Christian Carlo have recommended that. We need to get on top of that. We need to do a much better job of capital markets, regulators, Silicon Valley-like cities, not just Silicon Valley, Austin, many other places, working together like they do in so many other countries. And then finally, I just have to say it, in the US, all things blockchain, digital currency, they start and end with the SEC. And, we've got to give SEC credit. They faced a terrible ICO problem in 2017. It was needed to be stopped. They stopped it, and they should be admired for that. But that war has finished. And now we're in this tech Cold War with China. And instead of pivoting to encouraging US innovation to keep up, they've done the opposite. They gave Bitcoin and Ethereum a pass, proof of work systems. That benefits China, weirdly. But everything else is still in limbo, or worse, kind of being regulated through enforcement. And the message there is blockchain digital currencies are not welcome in the US. If you want to be in this business, you probably should be going somewhere else. And to be honest with you, we're even looking at relocating our headquarters to a much more friendly jurisdiction. Lots of them, UK, Switzerland, Singapore, Japan, and that's a shame. So we've got to change up here, or we're going to lose our leadership, stewardship of the global financial system. That would be a tragedy for the US. And I don't want to go too long on this, but one thing just to think about, if China controls the next gen financial system, that's an illiberal democracy financial system. You could expect things like social credit scores to determine who's going to be able to make a payment. It's like as far away as the vision of digital assets, blockchain, as you could possibly get. It's a worst case scenario, and it would be really terrible for Americans.
That's a lot to unpack, Chris, and especially what you said about Ripple possibly relocating. I want to come back to that in a second, but first, the broader themes you're talking about. I think especially with the digital dollar, my understanding, I've heard from a lot of smart people, that the great game is to displace the greenback as the globe's reserve currency, which is currently an enormous strategic advantage to the US. And I've heard even Europe is trying to craft its own version of a kind of central bank currency as part of the thing to rely less on the US dollar. Surely in Washington, there's a lot of people who know exactly what's going on and the sort of existential threat this poses to American prosperity. So what is going on in Washington? I mean, why is there such a kind of a logjam? Is it simply lack of interest? Is it, we're seeing some progress. Brian Brooks' work at the OCC seems to be carrying the flag for crypto and new payment systems, but yet we seem to be in the same place. What's going on? Will it change if there's a Biden administration?
Yeah. So I know that people in Washington understand the incredible privilege that the U.S. has and the advantage, the strength from a national security point of view, not just economic. So I think people recognize that. There might be a little bit of, I think, maybe complacency of, hey, the odds of that happening are low. We fought, the euro successfully. We fought the yen successfully 2 decades ago. So this isn't going to happen. But honestly, even if it's a small percentage of a risk, this should be all hands on deck because it's the consequences are so high. So I don't think that's quite resonated yet. We also really haven't realized that the China of today is different than China even 5 years ago. So I think even many regulators are still in maybe a mode of, hey, we can work with China. We were partners. We should be partners. And I believe eventually we will get back to being partners. And that's a great thing for the world. But that's not where it is today. Right now, China is threatening the power that the U.S. has in these cases. So I think we are starting to wake up to that, but it hasn't resonated throughout the U.S. government. And that's a problem. The U.S. government is pretty decentralized in a way, right? So we need to get back on it. I think if we do get a Biden administration, I do think that will get better. I mean, frankly, I don't think the posture that you see at the SEC today could possibly get worse for this industry, because it really is, it's a posture of crush it and push it away. And that's just the wrong approach. I think the Biden administration will be aware of where China's at. The weird thing is the Trump administration has been fantastic on China. I'm a huge supporter of the position we've taken. And folks like Senator Cotton, fantastic on the issue, right? He is really focused on that. The interesting thing is, so is Chuck Schumer. And when you get a combination of Senator Cotton and Senator Schumer together, I like both of them, that's powerful. So I do think that you very likely could go into a better posture towards China. And I also think a Biden administration is going to be another kind of thing that might affect our industry. They're obviously going to be a lot more focused on climate. We should expect there's going to be carbon pricing. That probably then hurts proof of work based systems when you consider, Bitcoin produces about 400 pounds of CO2 per transaction. That's enormous. If you had a $70 per ton price on carbon, that's probably where we're going. That's about a $15, kind of fee per transaction on proof of work. So that gets interesting. That actually might spur more innovation because it would loosen up the weird kind of embrace of Bitcoin and Ethereum over all other things. So that's probably a good dynamic, but we'll have to see.
Right, and a couple of questions have come in for me on my Twitter feed about Ripple's own relationships in Washington or the SEC. What you said a moment ago about possibly leaving the US, has there been new developments with your relationships with the SEC in Washington, or what's the latest on that front?
Well, I just think the whole tenor continues to be one of frustration that we don't have more clarity and we don't have more of a pro-US approach. Ripple has been a US-based company, about 430 employees. We paid hundreds of millions of dollars in US taxes, and we are setting the stage for future leadership that the U.S. would be in a great position going forward, right? And if you look at some of the banks and partners that we've signed up in the products that we produce as a company, that includes some very strong U.S. allies, Japan, for example, Brazil, for example, the Middle East, particularly Saudi Arabia and the UAE, great relations there. And then those flows into Southeast Asia, making great strides in Africa, which is a huge kind of disputed territory, if you will, between this struggle between the U.S. and China. We've got to win there. So all of those things add up to a very strong kind of pro-U.S. technology invented here, good for the U.S. It's perplexing that we don't have more clarity, but look, the world's moving quickly. And if there are other jurisdictions that are going to embrace this, we've got to look at those. The other thing I think we have to do, and as a call to action to the industry, is I think everybody who's in this industry in the U.S., we've got to help support some of these legislatures. Emmers, Conaway, who's I know retiring, but his bill hopefully moves forward. Soto, McHenry, Rokana. There is a group developing in Congress, I think, that's trying to take the mantle and maybe provide the clarity legislatively that we don't have from the regulators. And that would be a very good development. I think that might be the only path forward. So we'll definitely work on that. But in the absence of a change, I think every U.S. company in this space has to look at relocating, frankly.
Yeah, I want to go back, explore Ripple's operations more in a second, but tell me about this potential relocation. I mean, we've seen the long arm of the U.S. financial enforcement bodies are powerful. They seem to be able to get, punish people anywhere in the world. So would that really deliver you? Would you really be able to escape such regulation? And where would you go? You mentioned London or Singapore. Are those most likely destinations?
Yeah, I mean, you're right. I mean, you don't know how it's going to exactly play out, but those centers are trying to be sort of the fintech centers of the world. You have clarity.
So yeah, I'm gonna stop here because it's longer. But if you wanna check it out further, definitely check out the Digital Asset Investors video. I'm gonna link it here in the description. It is an interesting video, and a few takeaways here from my side is that from my perspective of how I see this is that I don't think necessarily that they will leave US, but I think they gain a good position there. They are well known in the industry, probably well known in Washington. As you see, you have heard they're basically talking about both possibilities with the Biden administration and continuing with Trump. Basically they're teasing both sides, and I think they just want to put a little bit of pressure for the security to give more clarity on XRP and the cryptocurrency in general. So this industry can evolve as it should, not being blocked by the government, because as they said, they consider it to be very important on global scale, especially if they want US to remain in that position that they are now. But I don't think they're gonna necessarily leave. But from this side, it just looks like they're teasing them and trying to apply a little bit of pressure there, and also considering both possibilities of administrations based on the election. But yeah, this is definitely an interesting video, and Digital Asset Investor always gives us good stuff, and gathers very important and interesting news all over the place. I'm watching his channel since a while now. Yeah, I think this is it for this video. I wasn't planning to do another video today, but this market is moving and never taking a break, and I couldn't stop myself to release another video about especially actually both news, because I think they're both interesting, and wanted to get a little bit on especially on the ban in UK, because it seems very bearish, but it's not actually very bearish at all. It might be actually bullish, and it might be good for the cryptocurrency in general. So if you'd like this video, if you found any value, please subscribe to the channel, click the bell notification to get all the notifications, and like the video. Also share with your friends and family. Thank you very much. Have a great day, and see you the next time.